Hello everyone, this is Nate Paulson from Paulson Wealth Management with the July 2017 Educational Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets in June and give you some insight into what they could mean for you as an investor. Now please stay tuned at the end for a required disclosure statement. June 30th marked the final trading session not only of the month, but also the first half of 2017. It's a period marked by strong stock market returns and exceptionally low volatility, although volatility returned the last week of June. During that last week, markets alternated between gains and losses, with stocks plunging on the 27th, surging on the 28th, and then plunging again on the 29th. Despite ongoing conflicts in Washington, Wall Street has still been in rally mode. The S&P 500 had its best start since 2013, and the NASDAQ had its strongest first half since 2009. Stocks have been lifted by the sense that other global economies, particularly Europe, are starting to stabilize. Now, not all stocks have risen. The S&P telecom sector, which includes phone and internet providers, as well as the energy sector, including oil and gas companies, are both down for the year. Our economy slowed less in the first quarter than initially anticipated because of some unexpectedly higher consumer spending and a bigger jump in exports. The U.S. GDP, the total value of goods and services produced in the country over the last year, has increased at a 1.4% rate, which is still the slowest growth rate since the second quarter of 2016. Job growth has been steady, and consumers are feeling better about their ability to pay their bills, take trips, and cover their other expenses. Consumer confidence rose in June from May, and experts say conditions are good for economic growth in the future. Americans' personal income soared in June, but that extra cash didn't seem to prompt consumers into spending. Personal consumption expenditures only gained 0.1% for June, the worst showing since February. Spending rebounded in March and April after starting the year on a soft note, but the latest reports suggest consumers are being frugal once again, despite the pay increases. So what can we expect from the market over the next 6 months? Looking into the second half of 2017, analysts believe it's unlikely that low volatility will persist indefinitely. Investors may need to brace for more big swings up and down in the coming months. Wall Street will be focused on whether corporate earnings can continue to rise at the healthy pace that they have been and what's going on in Washington and around the globe. Wall Street professionals say the best days for the stock market this year may have already occurred. What might stall future gains is a market that has become too expensive, political gridlock, and a slow-growing economy, worries about top-performing tech stocks cooling off, and a host of other issues. There's also the feeling that we just got off to too fast a start this year. Interestingly, consumer attitudes hit their lowest levels since November of 2016. Economists expect the measure of consumer attitudes to fall even more in the coming months, and consumer attitudes soured in June as the sentiment slid to a 7-month low, though it's still slightly better than economists' expectations and still holding its historical highs from the beginning of 2017. So that's it for the July Educational Economic Update. As always, if you have any questions or concerns about what we've talked about, please give our office a call at 630-517-2950. Once again, this is Nate Paulson from Paulson Wealth, signing off for the month of July 2017. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 630-517-2950, and we'd be happy to talk. Now here's that disclosure statement. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against a loss in periods of declining markets. The indices mentioned here are unmanaged and cannot be invested in. Lastly, past performance does not guarantee future results.